Did you know that over 40% of Americans have taken out a loan at some point in their lives? Loans are a common financial tool, but understanding how to get one can be daunting. Hi there, in this video, we're going to demystify the world of loans and guide you through the process of getting one. There are various types of loans, such as personal loans for unexpected expenses, car loans for buying a vehicle, and mortgages for purchasing a home. Loans come with terms like principal, interest, April, repayment term, and credit score. It's crucial to borrow responsibly and consider alternatives like savings or grants to avoid excessive debt. Before applying for a loan, check your credit score. A credit score is a 3-digit number that reflects your creditworthiness and financial history. It's typically calculated based on factors such as your payment history, the amount of debt you owe, the length of your credit history, and your recent credit inquiries. A higher credit score can get you better interest rates and higher loan amounts. Lenders view borrowers with higher credit scores as less risky, which means they're more likely to offer favorable loan terms. To check your credit score, you can request a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year through annualcreditreport.com. Additionally, there are many online services and credit monitoring tools that provide access to your credit score and detailed credit reports. If you find any errors or discrepancies on your credit report, it's essential to dispute them and have them corrected. Improving your credit score over time by paying bills on time, reducing credit card balances, and managing debt responsibly can open doors to better loan opportunities. So, before you start your loan application, take the time to understand your credit score and take steps to improve it if needed. It can make a significant difference in the loan offers you receive. Realistically budget to determine how much you can afford to borrow and repay without straining your finances. Gather essential documents, including identification, proof of income, and bank statements, to streamline the application process. Don't rush into a loan agreement. Compare offers from different lenders, whether they're banks, credit unions, or online lenders. Consider factors like interest rates, fees, repayment terms, and the quality of customer service. Remember, you can negotiate with lenders for better terms, so don't hesitate to ask. Whether it's an online or in-person application, it's essential to fill out all the required information accurately and honestly. Highlight your financial stability, employment history, and other factors that can boost your application's chances of approval. After submitting your application, lenders will conduct a credit check and go through an underwriting process to assess your risk as a borrower. Lenders consider various factors, including your credit score and debt-to-income ratio when approving loans. Tips to improve your approval odds include paying down existing debt and having a stable source of income. Once approved, the loan funds will be disbursed to you according to the lender's process, which may involve direct deposit or a check. Create a clear repayment plan, and remember, making on-time payments is crucial to maintain good credit. Understand any options for early repayment and potential penalties. Some loans have prepayment penalties, while others offer flexibility. Responsible loan repayment is an excellent way to build and improve your credit score. To sum it up, getting a loan can be a straightforward process if you approach it with knowledge and responsibility. If you have questions, don't hesitate to ask, and be sure to check out the resources in the video description for more information. Please consider subscribing to our channel and sharing this video with others who might find it helpful. We aim to provide clear and actionable advice in plain language, helping you navigate the world of loans with confidence.